Okay, everyone, welcome back to another episode of Line Your Own Pockets. Some interesting news this week is I think this is the first time we've done anything topical, that's happening. But what we're going to talk about today is that 72 Point, I think is the name of the company, Steve Cohen's company, is had approved the first 24-hour equity trading market in the US. So I think this is going to be a pretty big deal, not immediately, but going forward when it comes to systematic trading and trading in general, right? It seems like there's this creep's been going on for a while where, I remember pre-market was only a couple hours before the market opened, and now it's, 5, 6 hours before the market opened till a couple hours after the market closed. But this creep seems to be going, and this seems to kind of be the final nail in the coffin to make everybody catch up and say, it's time to let everyone gamble on GameStop at 2 in the morning on a Sunday. So, what do you think, Dave?
Yeah, I when I first saw this, I thought, okay, yeah, big deal, right? A few more hours where there's not going to be a lot of volume. But the more I thought about it, the bigger a deal it is going to turn out to be eventually.
Mm.
Um, there's there's a whole lot of implications the more I thought about this. And it's one of those things where it's not gonna have a huge splash right away, but over time you'll see changes, and it may take many years. I mean, it did for free market trading, and I think it will take many years, but I think there will be structural changes in participation, um, just the way trades are executed, strategies that become available, strategies that disappear.
Mhm.
All very interesting things. The more I thought about it.
And I'm with you on that. I think there's going to be kind of two steps to this that we'll talk about. And the first one is just the fact that you can trade 24 hours and what does that mean? But you're right. I don't think there's going to be a whole lot when it comes to liquidity. Maybe some stocks during some events, earnings or something like that may have full overnight liquidity. Uh, I think you can already do some of this now on Robinhood. I think you can trade 24 hours, and I don't think it's that popular. But what I'm looking at this as is more of a dissolution of the norms of little things like what is the open, what is the close, what is all of this. And I read the Steve Cohen kind of talking about this, and the reason that he made this 24-hour market and his exact correlation was crypto. Right. So I think that's probably where we could get started, where there's this market out there that I've been trading more and more during this insane cycle that's going on. But we have an example for what a 24-hour market looks like. And now that we've seen that, I think this is what they're going to model it after. So do you have any experience at all with trading or running systems or tests on the crypto market?
Um, no, but I've looked at futures. Those go later into the night. And of course, Forex. Forex has been around forever and trades 24 hours. So that's
Yeah.
another big, huge market that does trade 24 hours. Um, but each of those, the big difference, I think, each of those is a finite number of instruments, right? There's a lot of pairs, but there's only so many
Yeah.
compared to US equities where there's a whole bunch of US equities. So I think it is very different. I think the biggest part is, the big thing that a lot of companies are going to have to change is their overnight process. Like with trade ideas, there's a huge overnight process that happens and um, is critical that it happens. It's fundamental to how a lot of the baselines are created. A lot of the fundamental data comes in. A lot of scripts that run that bring in some of the data points. All that gets very complicated, and it's even when you went to 4 a.m. and 8 to 8 p.m. for after hours extended hours, that window is even tinier. It was tiny then for some
Hmm.
of these companies. So it becomes a more and more difficult technical problem to solve to do that overnight processing that is required. Not like it that just magically goes away. That stuff still has to get done. So it becomes a real engineering hurdle to get that done in the amount of time that is required. And to go for 24 hours, then what is that window? What does that look like? That becomes kind of an engineering nightmare and a really expensive problem to solve.
Well, yeah, and I think there's some great examples that I want to key on. So the reason I actually mentioned crypto instead of futures and forex is because it doesn't have that problem that you spoke about, right? There's thousands of different coins out there. Most of them are just junk, right? But
Yeah.
you could, I guess, you could make the same argument for the stock market, right? It's like, of the Russell 3000, probably 1,000 of them are okay companies, and the rest of them are junk. But um, so that becomes a big deal, and what you were mentioning with the shortening of that window, I think that becomes very interesting as well, because right now forex and futures, they have an hour kind of break every day, right? They close at
Yeah.
6 p.m. I think it's 5 Eastern for an hour, and then they boot back up. So that could be a thing. But what they're proposing here is eventually a push to a 24-hour, 365, right? Just like crypto, where there is just, they pick, each exchange picks an arbitrary time. Everybody's kind of accepted UCT, the Universal Standard Time, and they say that's when we're going to have a candle stop. But the dissolution of open and close is really what's making me think a lot about this, because right now you have this event that happens at 9:30 every day, and that's where all the institutional volume comes in. Everybody makes their bet. You have your most volatile time. Most trading strategies will exist for an hour or so after that. Fast forward 3 years from now in a 24-hour market, I'm starting to think that that's gone entirely, and we're just trading around major news events. Are you kind of thinking the same way?
I don't think that the open and close are gonna go away or become less important. In fact, um, they might become a little bit less important, but that's where all the institutional volume happens, and it's mostly on the close, and it's mostly in these auctions.
Yeah.
A huge part of it, and that's a huge liquidity event that big market participants can take advantage of. I don't see those going away, and that's really a huge part of why big institutions trade the stock market is because they have access to these auctions where they can move a lot of stock through them. So I can't. It's hard for me to imagine that becoming a whole lot less important.
Well, so what if, right? Because right now you said on the close, but so let's again fast forward a couple years, because I read another article actually this morning that in response to this new 24-hour exchange that's opening up, the NYSE, which is the oldest and the biggest out there, is pushing now to 22 hours. They want to do just a 2-hour close in the middle of the night. They want to launch that as early as I think Q1 of next year, which is kind of huge. So if all the big guys catch up, then why have the auction at the time they do, right? Maybe it makes more sense to have that auction at a different time of day, right? And I'm just trying, I know I'm like pushing to get like real meta, and we might be talking 5, 10 years in the future, but the whole is like, what is an open, what is a close? I remember when I was building systems in the crypto market, because I worked for a crypto firm doing that in 2018. That was a big question that we actually had to sit around and had an hour conversation for, is what is the open and the close? Because back then this market was so fragmented that every exchange picked their own open and close time based off wherever they were located. I could see that becoming a world as well, where it's like, okay, we've always kind of accepted that this happens at this time. And the example that I want to give is, I think it was like a Thursday or something that the NYSE just wasn't open for in the past. The hours of trading has changed since the 50s, I think 5 or 6 times. So
Yeah.
it's not out of the question to say they're going to change again and just everything's going to happen at midnight or something.
Yeah, I think there was, several decades where the open was at 10 o'clock, and it wasn't until 1985 where it went to 9:30, and the
Yeah.
hours that we see now have been in place since then. That's a long time. Um, yeah, I think it is interesting. I mean, for systematic traders, I think it's important. The question you, bring up there, what is the open, what is the close? There's a lot of data points that I have in a lot of my models that depend on the previous close.
Hmm.
And,
Same.
what does that mean? So, and if you think about it, in the post market, um, if the post market essentially turns into the pre market at midnight, which I mean, if you go 24 hours, it's a pretty arbitrary time of day to, like, make this huge switch.
Yep.
So I think it's important to think about what data points you're looking at, what changes you'll need to make, and, I mean, the good thing about systematic trading is if the industry coalesces around using the previous close and say in the post market that the previous close becomes essentially today's
Hmm.
close, which is one option that could happen. You have the option to make whatever you want. Like you could create your own little indicator in your models to treat something else differently to see if that improves your model in some way. So it's important to be, I think, as flexible as possible, but also start thinking about these things and thinking about how it's going to affect some of your models, how it's going to affect the market in general. I mean, um, yeah, I think there's huge implications, and some of them are annoying, simply annoying, but some of them are going to be pretty structural and important.
Well, and that's the main reason I wanted to bring this up is I want people to think about it. So again, I did a video on my own channel about this, and that was kind of the takeaway of that. Say it takes 6 months for that new exchange to open. There's no volume on it, no one cares. But then say it takes another 6 months for people to start caring, right? So now we're talking next year. There's either opportunity you're missing out on or changes that have made that could degrade some models that could change things. Now, I don't want to get all doom and gloom with everyone because, to be honest, I think this is one of those things that will heavily benefit the systematic trader and heavily benefit kind of the automated trader, and heavily hurt the discretionary guy who's thinks that his mission is to stare at charts all day because the old joke is there's no good decisions made at 2 o'clock in the morning. I think that will carry through with this as well, where it's, if you're waking up at 2 and looking at your phone and seeing that the stock that you like is hitting a price, that's not the time to be making decisions. So I think what's going to happen is, even if you go back to one of our first episodes where we just talked about basic order types, I think that kind of thing is going to get way more prevalent and it's going to push way more people into it. If you like this stock at $10, no longer are you looking to have that filled in this 6 hour time frame. You could just put out your limit order at $10, you could put out your stop loss order, and then you don't even, the system's just going to take care of it for you. So that's kind of the big thing when you start thinking about this. If you haven't made the jump into systematizing your, at least your execution, then I think this is gonna force you to do it.
Yeah. I think there's one major implication for systematic traders is like this was the first thing I thought of. So uh, think about the number of data points you need to collect in a database to do a back test, an intraday back test. If you're just looking intraday, that's 9:30 to 4 p.m. If you want to do the pre-market, all of a sudden there's probably twice as many bars that you need to collect.
Mhm,
Now, if we're going 24 hours, that's another twice as many. So that's 8 more hours, right? 8 p.m. to 4 a.m., where there's going to be bars, there's going to be data. You can just ignore it, but you're not going to want to. So that's going to be all of a sudden your database gets really large. It takes that much longer to do a back test across a large data set. Um, it's a lot, that much more data to have to manage, and that is not insignificant. I mean, compare so you're going from just intraday where you have 4:30 to 6. All of a sudden, you've got 3 times as much data to collect and keep
mhm,
track of and backtest through.
yeah,
So that's a huge thing. I mean, I remember when I started collecting a database of intraday minute bars. I got them back to 2000. So, and when I was doing that collection, I made some kind of arbitrary cutoffs of 8 a.m. because at the time there wasn't a whole lot of pre-market activity before that. I just made that decision to cut down on the amount of data I needed to collect and store, and uh, that was a decision I made to get a reasonable amount of data to collect. Well, if you had to do 24 hours, I mean, all of a sudden that's just a lot more uh, to have happen. mean, the other thing that your comment reminded me of, it when a change like this happens, a lot of people's tendency is to immediately look at what's happening and then sort of assume it's going to be like that forever.
Hmm.
And I think it's
Recency bias, right? Yeah.
yeah. So when and you need to have something in place where you see something, you make some notes, maybe you create a baseline. This is another thing systematic traders could do. Create a baseline of activity in some active stocks, perhaps. Create
Hmm.
a baseline for yourself, then come back in 6 months, do the same baseline and compare. Because the way it happened with me is I made that arbitrary decision to have 8 a.m. as a cutoff. In the meantime, there's been an explosion of pre-market activity
Yeah.
all the way to 4 a.m.
Hmm.
And that kind of snuck up on me. And I should have had a process in place to be watching that more closely than I did. And if I did that, I would. I mean, there's definitely some strategies I trade in the pre-market that I could have noticed earlier. I could have taken advantage of earlier, but I had this arbitrary thing in place where that sort of hid the details, and slowly things have changed over time, where the pre-market is really important now.
Yeah, I know some more discretionary day traders who exclusively trade the pre-market. As soon as the bell's on, they're done, right? And their synopsis behind it is that they don't want to get involved with the institutional liquidity. They want to trade. They think that right, these are very successful traders, so I'm sure it's true that they think that their edge is that they're trading in a time that they're basically just fighting mostly other retail traders and prop traders. So it is very interesting, and I think that actually leads me to the kind of next topic I wanted to bring up, where we talk about all the time how you're exclusively a day trader, and I am more of a swing trader. If the market's open 24/7, 365, does that line completely go away? Because now we're just talking, as opposed to day trader, swing trader, we're talking about more long term. If I'm able to buy something and put a trailing stop against it, a position that I like from a shorter term basis, and then I can hold it for 3 or 4 days if the thing just keeps going. The implication of, and we talked about this, I know in a prior episode, where we're like, don't pigeonhole yourself into I'm a day trader, I'm a swing trader, I'm an investor, because I think those lines are blurred as well when it comes to Bitcoin, for example, and crypto. I've taken trades that I expected to be in and out of in a day or so and have lasted weeks, and vice versa. Where for example, I bought it when it just recently crashed through 100,000. I had an order out there to buy it at 100,000. I said I'm going to sell it at 102, 103, and just take a quick scalp, and that happened in like a minute. And I didn't know how long that was going to occur. And I think a lot of the same thing is going to occur when it comes to this kind of trading, where the whole idea of I need to be out by the close because I'm worried about this overnight action that won't affect me. As soon as that liquidity starts to catch up in the after hours, I think that that's another thing that's just gone. Really, we're no longer talking day trading and swing trading. We're talking you buy the stock and then you sell it whenever it hits the profit target you have or the trailing stop or whatever it is. So that's another thing I think especially systematic traders need to look at is, if like you mentioned, if you're testing with intraday bars, now it's more about, are they 1 minute bars or are they 30-minute bars? And that, I think that's going to determine how long you're holding more than anything else.
Yeah, I think you're right. I think it's certainly interesting to think about, and um, I think time will tell. One thing I will say is, when you take a step back, I mean, the free marketist in me is totally supportive of this. Any sort of arbitrary rule you have that prevents people from trading, in this case, the overnight, I think is bad, right? It's putting a barrier in place for information to be processed and to be sent through your trades,
Hmm.
and that's the more you can freely exchange and more you can freely trade is a great information signal. I mean, there's information that comes with every trade that happens that is a signal to the market about what is going on. So the I think in general, the overnight would be great.
Yeah, and again, can you tell I'm a stay-at-home dad now, right? You tell I've been thinking a lot about this stuff, but there's other benefits that I think are amazing as well. So, for example, I, as a swing trader, generally don't like to hold foreign ADRs or securities that are listed in another country. Let's use China for an example. I don't like to hold those very much because you quite often get this overnight gap risk, and it's because if an event happens in China and you're trading, there, then by the time the market opens the next day and your stop order would be triggered, you could be well underwater on that position. This is another thing that I think that helps dramatically, because if I buy Alibaba and it moves and there's some sort of good event in China or some sort of bad event in China, I know that my orders are still going to happen. Again, assuming right now, we're saying that stop orders don't work in the pre-market and all that, but assuming we're talking full 24-hour market, the NYSE gets involved, stop orders and everything work. I think that's another thing. Not only am I more open to these foreign markets, but I think it also means that foreigners that are allowed are more open to the US markets, right? So if you are somebody in Singapore or something like that, and you want to trade the US markets or Australia, your only option was to either be fully systematic or to get up really early and trade throughout the night. I think that kind of dispersion is going to happen as well, where I'm going to be more open to stocks that are foreign, and people that are foreign are going to be more open to the US market.
Yeah, that's one of the major things I think will happen. So, um, there was something that happened in running back in the '80s, probably or '90s, that this made me think of. So, at that point in the college nationals, there were a lot of foreigners. Colleges would recruit foreigners. So you had Kenyans and Ethiopians running for U.S. colleges, and were dominating, and still
Mhm.
are, for in large part dominating the races. And in fact, in the NCAA championships, sometimes you would have to. So the top 25 are All American, and at the time, you had to be an American to get All American.
Mhm.
So sometimes you would go 50 deep to find 25 American to be All American.
Yeah.
And I think you'll find the same thing here because I mean, if you think about it, the markets are open now 9:30 to 6, I mean, to 4. Um, there's a lot of parts of the world that's a really inconvenient time to trade, right? That's in the
Yeah.
middle of the night in many places in the world. So that just automatically you're excluded. If you had 24-hour markets, I think all of a sudden you'll have a lot of foreigners where it is all of a sudden a lot more convenient to trade the US markets. And I think that will have some huge implications. I mean, think about one of the traders I'm coaching is a former professional poker player, and he gave me an analogy about poker where it's really nice that in the US, live poker, you have to be there live. If you There's online poker and there's live poker, and that live poker really excludes a lot of uh, people that don't live in the US that are really good at poker
Mhm.
and have uh, you know lower requirements for their living standards and are really good.
Yeah.
So it's kinda convenient that they're excluded from live US poker tables. I think that is also, I mean, that provides an analogy to think about for US markets and overnight trading and, foreigners being involved. I think that could have big implications, certainly to the less sophisticated retail traders.
Yeah, and you can see it, using crypto, because I think it's the perfect analogy here. You can see it in crypto. There's kind of a joke, that's 100% true, that it always makes its most insane moves on the weekend, right? You'll have Sunday evening at or Sunday afternoon at 3 o'clock. You'll have Bitcoin rocket 20% or tank 20%, and I think a lot of that is because you have, again, these other markets, these other participants that are basically waiting for all the Americans to go to sleep, where maybe the liquidity thins up a bit and they can push things around. So yeah, I am hugely excited for that. And what I think is going to happen, if I had to gun to my head, I had to guess, is you're going to have these, everything's going to push around events, because this is another thing that I want to talk about again. I'm thinking a lot about this. The right now, all companies, most companies report before the market or after the market. It's very rare you see a company that report earnings as the market's going. And the reason they generally do that is they don't want their stock to go crazy, right? So, they'll wait for the market to close and then they'll report earnings because they know there's going to be a bunch of crazy after hours action. But most of their investors that are looking at it only see the close to close price, right? Apple closed at $100. Yes, it did some crazy up down 10% after hours, but it opened the next day up or down a couple percent. Who cares? That's going to be gone as well, right? So are we going to see the the Wall Street kind of get around, okay, we should report earnings around this time of night, and they still pick a fairly liquid time to do it? Or does it just make sense that every company is going to schedule their earnings report and their earnings call whenever they want? That to me would be very interesting, because what that does is it means, reach out to whoever your scanner is right now, because I think there's going to be a huge benefit to being someone who can scan real-time volume spikes. Because I think if you take the entire 24-hour day, and let's say Apple is going to report earnings at 2 in the afternoon, I think you're going to have 90% of the volume that's going to happen on Apple is going to be around this particular event, and then, a couple hours after. So this whole thing of this time of day that things report is just now gone. You're just going to have these volume spikes on stocks throughout the day as they start to report earnings. That's going to be, I think, another huge, huge mix up in the market.
Yeah, you know, I'm not sure that it's gonna be more volatile, 'cause in fact, I think it's probably gonna make things less volatile. Because think about your analogy with, uh, crypto and things going crazy on the weekend when there's low participation. Um, I mean, think about the overnight right now. There's pretty low participation there because there's literally none, no
Yep.
participation. So, when you have participation, then you can these overnight gaps will be reduced because even if there's just a little bit of participation at first, that
Hmm.
will be a calming effect. And I think overall it'll make things smoother and
I agree. Yep. I,
more systematic.
I think it's more going to be, and maybe I word it wrong, volatility of the time that it happens, if that makes sense, right? So, generally speaking, if you know that Apple's reporting earnings after the close, it's going to be a pretty dull day for Apple, right? People aren't taking huge bets one way or the other. Generally, it's going to be pretty slow. What I'm more interested in, and again, this should be something that I hope our listeners are viewing as this is going to be a big change for the people who are stuck and don't think like me and Dave does, where you can tell we're kind of excited for trying to just, we're doing like the story crafting of what could be and how would it look and how would I take advantage of that. Those people I think are going to be fine. The people who are stuck in their ways, I think, are going to have a hard time, because when you don't have an open close, you're just going to have, it's going to seem almost random when companies are reporting earnings. But like you mentioned, if everybody's now allowed to participate, if Apple's reporting earnings at noon and stop orders work and profit targets work and automated trading works, I think, yes, they'll become less volatile, but there'll be more potential opportunity there for a retail trader who's, right now, I'm not going to take a bet into Apple's earnings, even if I have a bunch of data that says that, because I can't put out a stop loss order and have that filled at a reasonable price. But say I know that if Apple runs into earnings, then, most of the time it runs after earnings. Say I have a really strong data point that supports that. If there is no, I can use all of this automated trading tools when the market is 24 hours, I'd be more amped to take a trade on it. Say, okay, it's meeting all the requirements going into earnings. I'm going to take the trade. I'm going to put out the stop loss based off how volatile earnings. I can build trading plans around these events. And I know this is what a lot of Forex traders do, where They're studying these fundamental earnings or economic reports that come out, GDP and all of this, and then they're waiting for the number to hit. And if it lines up with what they're thinking technically, they're taking these trades, and that's where they make most of their money because there's these explosions in volatility that then get corrected pretty soon after. I think it's going to be the same thing for stocks. So I'm very interested on how the technology providers keep up because if Apple's going to report its earning at midnight, I need my automated system to pick up that earnings trade and the increase in volume and then make trades off of it.
Yeah. Yeah, so, you mentioned something earlier about Robinhood offering 24-hour trading now.
Yeah.
Uh, Interactive Brokers actually offers 24-hour trading now. I haven't tried it or looked much into it, but I'm pretty sure they do. So that's
Limited.
super interesting.
Yeah, it's like the top, I think, 50 names by liquidity and then a whole bunch of ETFs that they offer
Mhm.
24.
So the other thing that, it makes me think of is, um, I have a strategy that trades the pre-market, and it took me a while, but I figured out how to create a stop order in the pre-market that works.
Okay.
So, um, if anybody's interested in that, send me an email at dave@davemabe.com. I even thought about I think it's pretty good. I even thought about having a little webinar or something about it to get some feedback on it because I think it's something I thought about for a while and finally figured it out, and it works pretty well with IB. So, yeah, if anybody's interested, send me an email.
Yeah, and I think there's going to be a lot of this. I think there's going to be a lot of the people that look at the market as a puzzle, which I think is probably the best way to look at it, and something to be solved. I think we're going to have a really cool time here because, again, we're not neither me nor Dave is saying that you're going to wake up tomorrow and all this stuff's going to happen. But what we're seeing is at an obvious road, and the beauty of capitalism and competition is that if this one guy does it and he starts making a bunch of money on it, you better believe Citadel and all of these other names are going to either join his exchange or create competing exchanges, and eventually you're going to have this volume that's going on. So it's one of those where we're seeing Pandora's box open a bit, and then I think the next question is just going to be how much money is this guy making? If he's making a bunch of money, then I would say in a year or so, every exchange in the world is going to be 24 hours, 365. You're going to have people gambling on the Super Bowl and at the same time buying fart coin and at the same time trading Apple earnings and the whole Howard Lindzen, the creator of StockTwits and a venture capitalist in the FinTwit space, always he has a whole thing now where he's calling it the degenerate economy and how this is growing. And I think this is a major part of that.
Yeah, I think you're probably right. Yeah, I've heard him use that phrase, and yeah, I think that's an apt phrase to use here.
Yeah. Well, listen, so we don't know what's going to happen, but it's I think the theme that we're trying to get at is that right the door has been open. It's time as a trader, either systematic, discretionary, whatever, you start thinking about this because I personally think, and I could be wrong on this, that in a year or two, the market is looking vastly different than it is now. And even if your current trading strategies don't degrade, if the open is still the most important time, if all these things, you still may be missing opportunity, like the example that you gave, Dave, about not tracking this activity in the pre and post market. So make sure you're thinking about this not only from the side of I'm worried about what I'm currently doing not working, which certainly could happen. But you're also looking at it as there may be other things that I could be doing that could be doing the same or better. The last thing that I wanted to kind of chat about you, Dave, is the whole buying power aspect, right? Because before it was is you as a day trader, I'm going to utilize my buying power when the market is open and I'm going to just have a bunch of cash when it's not. Well, if the market's open 24/7 and there's activity all throughout that market, that's got to really expand your brain because now you should be able to put different strategies to work while you sleep. It's the old Buffett quote, right? If you don't learn to make money while you sleep, then you'll die poor, or probably more elegantly put than that. So how does that make you thinking about the whole buying power dilemma? Are you just going to even if your normal strategies work, are you going to be hunting to deploy other strategies throughout the night while you're sleeping?
To be determined. But I hadn't thought about the buying power implications, and
Yeah, is it going to be
specifically the cutoff where you get 4
leverage?
times during the day, but only 2 times at night. What happens? And I'm not even exactly sure when that switches over. I assume it's at the close
Hmm.
now. Um, but yeah, that's super interesting. I hadn't even thought about that. But yeah, I think that a lot of strategies will probably lose some edge, but new strategies and new edges will present themselves. And it's important to think about these changes and anticipate them and watch them, and have theories about what changes you think will happen, and watch the markets and see what actually does happen. So, and a a lot of edges I've come across and that I've created for myself only came after years of looking at the markets. So
Hmm.
it's you have to create a habit for yourself of watching these things, keeping track of things, knowing the right things to look for, knowing the right things to ignore and don't waste your time with. And all that comes with experience. But yeah, you're right. I mean, it's a super interesting time to be a trader because of these changes. And the other thing I was thinking about was, as you were mentioning, all the money that these people might make with these exchanges, all the technical problems that are definitely real. All of a sudden, there's a whole lot of motivation to uh, uh, to accomplish them and work on them and solve them if there's money involved. So
Yeah.
that becomes clear, and yeah, a lot of these technical problems that seem like huge mountains, all of a sudden they'll be tackled for sure.
Well, and it's the technical problems without getting into the nerd stuff that most people probably aren't interested in. But there's this whole back end of the stock market that not a lot of people understand, where it comes to the settlement of shares, the fact that we're still not on real time settlement.
Yeah.
They wait till the market closes and then they try to determine who owns what every night with the DCT, whatever it is, back end. That's government, and they're gonna have to get off their ass, and I don't know how well that's gonna work. So that might create a whole nother craziness. That's what caused the initial GameStop insanity. Is there was no central reporting for a short float, so and everyone ended up being short the stock. So yeah, there's going to be all of these weird technical hurdles that may actually lead to bugs, which may be exploitable bugs that you can maybe play with for a while before they get kind of patched in. But yeah, I'm not a developer like Dave, but I look at this and say, they better get a lot of things together to not have things just crashing, flash crashes. When I did my video, that was actually there was 3 comments on it and say, "Do you think this is going to increase the probability of flash crashes overnight?" And I said, "Absolutely. If you don't have all of these liquidity makers playing ball at 2 in the morning, and you're not going to have a human desk watching that as much, that's going to create some other problems. I think those will be temporary. You'll have a couple of those, the market will get all upset, you'll hear about it in the news, and then they'll fix whatever they need to fix. But yeah, I think it's wild times ahead.
Yeah, super fun.
All right. Well, again, thank you all for coming by. And even if, right, you think me and Dave are wrong and nothing's going to change and blah, blah, like Dave said, have some sort of system in case you're wrong and things do change dramatically, that you're not leaving money on the table or having things that you kind of normally do degrade. So I am Michael Noss.
I'm Dave Mabe, and we'll talk to you next week on Line Your Own Pockets.